Hi traders, in this video I'll be breaking down how I use the COT report and interest rate triad to analyze the market effectively. So hold your beer. The first thing we discuss right here as our Christmas gift, or as a Christmas gift from you to you all, is I'll first cover COT report, how I use COT report before we go into the interest rate triad. And some other tools I use, which won't be discussed right here in terms of fundamental analysis, but these are the two major things we discuss right here. So the first thing is on the COT report is the change in buyers and sellers. So you look at this particular column right here, which is long position and short position. So long is buyers, short is sellers. Now these numbers you are seeing here are contracts that are being added to the market or being subtracted from the market. So you have what called change in long, which means these are the people that are either adding their position, their buy contract, or removing their buy contract. So that is what change in long. So we also have change in short, and we have this column, which is what net position. So these are the most important things we'll be looking at today. So the first thing is the buyers. Now you notice that we have higher number in terms of the buyers compared to the sellers during this time. Okay, until it change. And how do I use it? I use it within the period of what? 3 months. All right, 3 months interval to determine if we are bullish within the 3 months or we are bearish within the 3 months. So when you look at it now, you understand that within the last 3 months, what the sellers are increasing. It means like Euro USD, we have been bearish because this is traded against dollar. It is paired against dollar. All right. So since we have been bearish for the past 3 months, you will understand that means on the chart you will be seeing what more sell power than buy powers on Euro USD. So that is the first part you have to understand. Then we have what we call change in long and change in short position. So right here you see how many buy contracts they are adding or subtracting from the market. Right here you also see how many sell contract they're adding or subtracting from the market. So if they're adding more sell position than the buy position, that means this pair, which is Euro, is this currency, am I to say, which is Euro, becoming weaker. So you will have to pay it now with what is stronger currency like USD. And this is mostly traded against what? USD. So right here you can see the numbers, right? Minus 16, that means they close to about what? Minus 16,000 long position, right? From the previous week, all right? From the previous week, because this is kind of what? Lagging indicator. But here's how I use it, which I will explain in this particular video within short minutes from now. So we have what we call overbought and oversold. Overbought and oversold is when market get to what? A certain level, maybe a historical level, a higher time frame support or resistance level, then they added what? A lot of buy position around that particular level, or they added a lot of what sell position around that particular level. That symbolize what? That what? There's what the exhaustion coming. Though there is another method of using exhaustion in terms of using net position, which won't be explained right here. So that symbolizes that what they are overbuying or there's overbought or oversold in the market. So we can what cause what for a reversal, reversal in form of what back before that trend continue or a complete change of what character in terms of market. And market always change in terms of technical analysis, but that is on intraday time frame first before higher time frame become bullish, which you can see on the chart. So the first thing is here you look at what is happening in the market in terms of what fundamental analysis. Then we have we have the next part, understanding the net position, and use what 3 months interval for this. All right, I compare the last 3 months. So what is happening here? You will see that what the minus is increasing on this arrow. Minus is increasing. That means this pair has been trending to the downside. It gives you more confidence that what they are still selling this particular pair, which which support your what bearish order flow. Now, this does not mean that buyers will not, that maybe you will not see some buy candles. All right, no, it means that overall the trend is to the downside. So you will always expect what a pullback in the market, then expect where market will continue the downtrend. So that is the most important thing you have to understand right here. So we have the next part, which is how I use it in terms of week to week analysis. So I do use what 3 weeks interval between the change in long and change in short position. So in the last 3 weeks, let's take for example here, the adding more buy position. That is the first thing I notice. If they're adding more buy position right here, are they adding more sell position or more buy position within the last 3 weeks? That is the next thing. And then I will use it to compare the last or the recent data. I use it to compare the recent data, which is the one that come out that very week. So that will now give me if I'm to expect more sellers or expect more buy in the market on that particular pair. So that is what I use in terms of what fundamental analysis. That is it for the COT report, because I don't want the video to be too long so that you won't get bored. Then we have the second part, which is interest rate triad. This interest rate triad, okay, this is a UK bond market, which can also give you if if GPP is strong or weak at the same time. But this is a leading indicator compared to your COT report. COT report is a lagging indicator most of the times. Why this is more of what a leading indicator. If GPP is strong, it will first show it right here before it will even start affecting GBP USD or other GBP currencies. It will first affect market here. If the price is weak, it will first appear here before it affect that particular currency. But the one we are discussing right here is for USD. So I will explain how it affect trend, signal strength or weakness on USD, which is this. So we'll be using just one of these three interest rate triad. Triad means three, right? So this is the interest rate triad. So we'll be using one, which is 30 years bond futures. So when market is trending to the downside, right? When it is trending to the downside, like I said, what leading indicator, that means they first start affecting the interest rate triad, which is interest rate. They first start affecting this particular market before it affect USD. So if this pair now start turning bullish for like week or 2 weeks, and other pair is still bearish, right? Let's say for example, GPUSD is still bearish or EURUSD is still bearish. At that point, what do you expect? That means it will very soon you will expect what change of trend on like EURUSD or GPUSD. So the first thing you understand here is this trend, this one trending to the downside. That means USD or DXY trending to the upside. Okay, that means USD is trending to the upside. So downtrend here indicate strength on USD, while an uptrend here indicate weakness on USD. So this can you, and I believe most ICT traders will understand that these are what ICT use in terms of directional bias first before he can start using maybe market maker model, buy program, charity, and other things you can use to enter your trade, because those other things are not what give you directional bias. So fundamental like seasonal tendency, though I don't use seasonal tendencies and other things that he himself explained. So the major things I use are this COT report and interest rate triad mostly. So these are the things I use. And that is all for this particular video. So good luck. And I wish you all Merry Christmas and Happy New Year.